Hello and welcome back to Game of Trades, your #1 channel for videos on the stock market and cryptocurrencies. This video is going to be focused on the S&P 500 that's been grinding up very slowly towards its all-time high. I do believe we made a new all-time high. There's nothing much that's been going on the markets, but there's a lot of things happening under the hood. We saw yields break down this week. That's a huge development. We're going to discuss what kind of an impact that's going to have on the markets. Now, if you're new here, make sure to smash that subscribe button because we post these videos multiple times a week covering the technicals and the fundamentals of the stock market and how to properly benefit from that research. Now, without further ado, let's get right into it. So just a quick reminder for anyone who's new to the channel, this is our intermediate term outlook for the S&P 500. We recently saw a huge breakout above this long-term price channel. So just from a technical analysis standpoint, this is just a massively bullish development. Now take into account easy monetary policy, extremely high liquidity, and an economic recovery. That's all bullish for the stock market. And that's really what we try to focus on the YouTube videos and on gameoftrades.net with our members. We're really trying to capture the larger trends in the markets, right? Those big breakouts, those big resistance levels and support levels, and try to take advantage of those larger trends. But to know exactly when we enter a position, we have to dig deeper into the charts and take a look at the short-term technicals. So that's exactly what we're going to do right now. This is the futures chart of the S&P 500 on the 8-hour time frame. I've got a couple of channels highlighted here. This is that same long-term level of resistance that broke out, became support. We bought the dip right here with a nice trade setup that was posted on gameoftrades.net. But if we zoom in here, let's take a look at whether this is an objective long entry for the S&P 500. And I'm going to give you a very clear answer right now. This is not an objective entry. We're near resistance here, near that price channel resistance. We've had a rally from that low here with declining volume, so that's not necessarily a positive development. And if we add the MACD on this chart, so measuring the momentum of this move here, you can see it's relatively weak. We've got price making a higher high, momentum waning down. So this doesn't look like an objective entry. Now we could always have a renewal of that momentum with a news type of event that brings the market higher. But right now, the current technical picture suggests we could see some short-term volatility if we begin breaking down below this level of resistance, and that could provide some nice buy opportunities at lower levels if we see a retest of that trend line. Now again, we don't have extremely high convictions on the shorter term price action. We're not trying to predict every single move that we see on the S&P 500. That's not possible. Anybody who tells you they can do that is a fraud. What we do on this channel and with our members on gameoftrades.net every day is look at the technical picture and identify what our risk is and what our potential reward is and whether we should be taking a position at that moment. And right now that's not the case, but if we see a move down here, that could very well be a beautiful long entry on equities. But now I want to discuss the real point of this video, which is the technology sector. And this is where things begin to get very interesting. We've got the Nasdaq 100 right there in front of us. That's still within a bullish price structure, right? We're making higher lows here. We're making higher highs. Now, we haven't taken out the previous all-time high just yet. If we do, that would be a bullish development, right? It would further confirm that uptrend. If we reverse here, that starts to look a little bit more bearish in terms of the price structure. We'll see what happens here. But the real question we should be asking is whether the Nasdaq 100 is going to be outperforming or underperforming the rest of the market, because that's how you're going to be able to be properly positioned to beat the markets. And in order to take a look at that, we divide this chart by the S&P 500 right here. So that gives us that tech performance ratio that we've been looking at over the past couple of weeks. And this is the chart. So in the last video, we were looking at this down trend line resistance, and also this resistance, this horizontal level of resistance right here. And we said if we break above that, that starts to look a little bit better for the tech sector and would increase the odds of seeing a better performance of the Nasdaq 100. Now we're going to take a look at that in detail in this video to see if that's actually going to be the case. Now, what helped this rally in this tech performance ratio is the breakdown in yields right here. So this is the 10-year yield. We had this huge rise in interest rates right there, triangle consolidation pattern, and then a break down here. Now on gameoftrades.net, we posted this article, yields begin to break down, where we had that first show of weakness of yields breaking down below that triangle consolidation pattern, and the fact that that could cause a rally in TLT, which is so far exactly what we've had. If you want these types of updates throughout your day to help you with your trading, your investing, whether that's in the stock market or in any other asset class, go and check out gameoftrades.net. I think you'll really enjoy our service. We recently posted a sneak peek at our brand new website update that we're going to be making this quarter. We're really excited about all the things coming up and everything we've been working on in terms of the design, the functionality, and also the service and the quality of the analysis that we post on our website. So yields have been coming down and are getting closer and closer to this uptrend line support right here. And this correction in yields is helping to push tech a little bit higher, right? As yields fall, that generally benefits growth and technology stocks more than the rest of the market. So the question is this a sustained move where we're going to see tech continue to outperform and yields continue to go down, or is this just a counter trend correction? And that's what I want to take a look at on this chart right here. I'm going to delete this trend line and we're going to take a look at the trend and whether this rally here is likely to be a long-term reversal or whether it's more likely to be just a counter trend rally and we're going to see a reversal here. We're going to try and take a look at that as objectively as possible and find a price channel that fits this technical picture in the best way possible. Now, if we try to identify a well-respected price channel on this chart, it would look something like this. We have the first bottom of the channel capturing these two reactions here, the bottom two reactions. Then the next trend line captures this series of reactions along the way, very well defined here. Then again, always using symmetrical lines, right? Each line has the same angle. We can put one with many reactions right here. If you zoom in right there, you can see the number of reactions where this trend line acts as support here, then once again as resistance right there. Then you've got the final two trend lines here, another one acting as support, resistance, and now that's being tested right now as we speak. Now, we're not trying to make radical predictions in our analysis. We try to follow the highest probability trades. And in order to do that, you have to follow the trend. You have to follow the chart that's in front of you. And for now, the tech sector is still in a downtrend relative to the S&P 500. Now, we do have a couple of bullish developments. We had a nice impulsive breakout here back above this line of resistance. So that looks like a kind of bear trap here. You can see that's a bullish development. That's the first check mark for the bullish case, but we still have quite a lot of resistance above here. So until tech manages to get out of this price channel and begin really breaking out above this price channel, until we have this type of move, we'll keep our bearish bias on the tech sector. We keep our bearish bias on the tech sector, although it could morph into something more. Right now, this is still a relatively weak move. You can see we've got declining volume on this rally. So it doesn't seem like we have a lot of demand for tech right now. You can see the volume here throughout the pandemic that was extremely high on the moves up in the technology sector. That's bullish price action. That shows there's a lot of demand, but this type of small rally with weak volume, not so much. So still a lot of work to be done on tech, but we keep an open mind, especially if we continue to see lower rates. Now, the second big question we're asking in this video is whether this is a counter trend correction in rates or a long-term reversal. Knowing which way the 10-year yield is going to go can give you a huge edge in the market, because that changes the entire market environment, right? In this move up here, we had rising rates, which benefited sectors like the financial sector. It made bond prices drop like a stone and pushed equities much higher. If we have a falling interest rate environment, that changes the entire context. And right now, we're still leaning towards just a counter trend correction. This was something that we expected. Rates were way overextended right here. They were at resistance. We needed a pullback, and that's exactly what we're seeing right now. But we're still trending up here. We're still above this strong level of support. And if we take a step back and take a look at the weekly chart and zoom out on this chart, you can see I've put a few vertical lines right here corresponding to significant tops in the market. And the reason I've done this is to find out whether big tops in interest rates can happen with extremely loose monetary policy, right? Because right now we still have a huge expansion of the Federal Reserve balance sheet. So we are still clearly in a QE environment, and the federal fund rate is still near zero. So both QE and interest rates are extremely loose. There's a lot of liquidity, a lot of free money. And we wanted to ask the question, do most significant tops in rates happen with tight or loose monetary conditions? So let's put up the federal fund rate on this chart. So that's the orange line right here. That's the Fed fund rate. And you can see in each case, so 1994, 2000, 2007, we have a peak in interest rate as the federal fund rate is rising or is much higher than before, right? Same thing here. Big top in interest rates right after a big rise in the Fed fund rate. Same thing here. Big top in interest rate right after a big rise in the federal fund rate. Same thing in 2018. Big top in interest rates as the federal fund rate is much higher. The only exception here is 2014. And in 2014, that was actually when quantitative easing stopped. And so the markets were beginning to price in that tighter monetary policy than throughout 2012 and 2013. Knowing which way the 10-year yield is going to go can give you a huge edge in the market, because that changes the entire market environment, right? In this move up here, we had rising rates, which benefited sectors like the financial sector. It made bond prices drop like a stone and pushed equities much higher. If we have a falling interest rate environment, that changes the entire context. So for now, that's our approach to this correction in yields. We've never seen a significant top in the 10-year yield with loose monetary conditions like we have right now. We think the 10-year yield will eventually be topping once monetary policy begins to tighten. Now, that's about all I wanted to cover in this episode. I hope you guys enjoyed. If you did, make sure to drop a like and subscribe to the channel if you haven't already. Now, in the meantime, good luck on your trading and see you next time.